Hello, traders. I am Rachel Deshelle, Senior Manager of Trading Services, and I am filling in for Barb Armstrong today on getting started with technical analysis, where we focus on indicators, and we're going to go through the Bollinger Bands today, talk about what they are, how they're used, and how you can develop trading systems around them, and also maybe how to find some of these breakouts as well for those trading setups. So we have, let's see, we have Brett Crowther in the chat today. Please chat in your questions, comments, requests during today's session. I will be sure to keep an eye on those as we go. And please follow us on X. He is Brett Crowther CS, and I am Rachel-CS. Please give us a thumbs up if you like this video today, if you find it useful, and please subscribe to our Trader Talk Schwab coaching channel on YouTube. So before we get started, let's hit those important disclosures and then we can get into our agenda. So the information today is for informational, educational purposes only, should not be considered any type of recommendation or advice. And we are going to go through paper money today. There are quite a few differences between paper money and live trading, so be aware of that. And options carry a high level of risk and are not suitable for all investors. So just to kind of recap, I know Barb has taken you through this amazing series with 9 different lessons. And we are at the last one today, lesson 9, indicators. We kind of use this as a bonus session to go through in depth what one of these indicators are and how to build those systems around it, like what I mentioned. So this is part 9 of that series there, and you will find a playlist of all of those with the Getting Started with Technical Analysis playlist on our Trader Talks channel. Now, to get into our agenda a little bit, well, I guess first, an announcement. That's the first part of our agenda. The announcement is we have some exciting trading workshops coming up, and I think this one is an old slide, so sorry about that, guys. Well, we have Miami in on the 19th and 20th, advanced options. We do have Dallas, Fort Worth, that's going to be beginning of January, and then we have Bellevue, Washington, end of January. Sorry for that not updated slide. I thought I updated that before this class. But we are all humans, so we're going to get into the agenda here. We're going to talk about the what and why for our technical analysis tool. We are going to talk about strategies, look at examples on charts, and possibly place a example trade today. So let's get into the Thinkorswim platform, where we can talk about what Bollinger Bands are and really how they are used. So essentially what Bollinger Bands are is they are these 3 lines, and you can add them from the studies window at the top. You just search Bollinger Bands on the left-hand side and you can add that there. Now, what these are essentially is the middle line is the 20-period simple moving average. And it's surrounded by these 2 bands on either side that are actually 2 standard deviations away from price. So we're going to kind of take a minute to take this back to our high school statistics class. I think that's when they taught about normal distribution curves, the sigmas, standard deviation, all of that. We're going to get into a little bit of that today to really kind of showcase how these are used and what breakouts from these bands or bounces from these bands really mean and how you can trade them. So let's talk about what standard deviation is first. So that is going to be the variance or that volatility of returns. And so what essentially it does is it plots it 2 standard deviations above, 2 standard deviations below, which is essentially going to comprise 95% of the price action. And I'll draw this normal distribution curve here in just a moment, but as you can see through time, these bands will obviously change their directional slope based off of the trend of that stock. So similar to a moving average, you'll kind of see that the slope of the moving average will kind of dictate where that trend leads. So if you're obviously seeing a bit of chop in the Bollinger Bands. You may be in a range-bound market. If you're seeing the down sloping line of the Bollinger Bands, you are in a downtrend, and vice versa. When you see an upsloping line, you are in an uptrend there. So traders will keep that in mind, the slope of the Bollinger Bands, as they take positions, as they craft their strategies for mean reversion and breakout strategies. So those are going to be the two that we talk about today. So if we just kind of look at kind of this course over time, we see that the Bollinger Bands will expand to these very wide levels that we saw, like here, especially in around April time. And then we see the bands really contract, like we saw here in June, and we saw there yet again in mid-October. And so what that really means is that volatility is getting compressed because the variance of returns is going to stay in a smaller range there. And then when volatility picks up, it's typically looking as far as a expansion of volatility. That's typically where you find some of those breakouts with the Bollinger Bands there, really for more of like a tail type of event. So let's just draw on this chart exactly what I mean in this case. So I'm going to draw a normal distribution curve, okay? So taking it back to statistics. And if we just look right in the middle and draw a line in the middle, this is going to be the mean or the average. So this is our mean. Now, what we also kind of want to keep in mind here is when looking at the Bollinger Bands, since that midline is that 20-period simple moving average, that is going to be the mean. So that's going to be the average that we're talking about. Now, if we look just one standard deviation away, wow, I cannot draw a straight line today. I am not good at using this tool. Okay, so if we look just one standard deviation away, this is going to encompass 68.2% of the price action. So 68.2, so this means that this is 34.1% on this side, 34.1 on this side. So that is 1 sigma away, or 1 standard deviation away. Okay, but we talked about how the Bollinger Bands looks at 2 standard deviations away. So we're giving ourselves a little bit more space here, and we're just going to draw another line here, draw another line, and this is going to be a 2 sigma or 2 standard deviation move. So I'm going to draw that on here. And this is going to encompass 95% of the price action, okay? So this is going to be about 13.6 right here and 13.6% of the price action. And the reason I'm drawing that just between these lines is this is showing that from the mean to the standard deviation to the upside, we'll put a positive sign in front of these. That is a 34% probability within that range, because it takes that 68.2% and it really splits it in two, because you could have a 34.1% move on the downside and you could have a 34.1% move to the upside there. And then the difference between this 1 sigma and 2 sigma, or 1 standard deviation and 2 standard deviation, it's going to encompass a little bit more of the price action, obviously. So giving it that more than, it's like a 26.2 kind of move added to both sides, so kind of split in half again. So that's where we're getting this 13.6, 13.6. So we're not even talking about the 3 standard deviations out to the outer parts of this. So let's just take a look at that, what that would be if we did see a tail type of event here. So if we saw a tail type of event, which we typically see with a possible breakout of these Bollinger Bands, we have a tail width, and that would give us, let me pull up my little calculator here. So we have 95 point, 100, because because this curve is going to represent 100% of the price action, and we're just going to take that minus 95.4. And that's going to give us our tail event of what's left, 95.4. So that's about 4.6. So that gives us a move to the upside and a small tail move to the downside here. So obviously there would have to be some type of tail driven event, such as a breakout where we can find possible alpha to the upside or to the downside here within a possible move. So let's just kind of talk about what that would look like. So if we have, let's say, a breakout trading strategy in this case, we're obviously looking at a tail event. So we're wanting to take advantage of that trend to the upside or to the downside, and we want to take advantage of those tails. Now, the other strategy we're going to talk a little bit more in depth about is the mean reversion strategy. So maybe we have a move out to this 2 standard deviation, but we know that price tends to revert to the mean, which would be back to that 20 period simple moving average, or that mean value right in the middle. So that's what a mean reversion strategy would look like. So let's go through a couple examples of what both of these would look like, what would be our buy and sell signals, and then we can dive into just kind of searching for some of these as well. So hopefully that all makes sense. I'm going to double check the chat. Brian Clem, Rachel, could you explain the narrow bandwidth between February and March? Yeah, let's get rid of these annotations here. February and March here. So we had a volatility compression here. So when our bands get a lot tighter, that also means our prices are getting a lot tighter here. So I'm going to actually zoom into this and use that as an example. Okay, so this was February here. So sometimes you'll see that this will occur within a range, or sometimes prices will sometimes just coil up here and almost form like a triangle type pattern, because price is just getting squeezed and squeezed and squeezed. That battle is happening between the bulls and the bears. The bulls are driving it up. The bears are pressing it down with this same kind of level of supply and demand, or that same level of pressure. So as that variance of returns, or as those price movements over that amount of time get more and more compressed, it's obviously going to compress those volatility bands as well, because those returns aren't wild. They aren't encompassed with a wide ranges, price gaps, things like that. It's prices trading in a tight range. So that's when volatility tends to contract as well. And when we see that contraction in volatility, since volatility is mean reverting, typically low volatility periods tend to switch to high volatility periods. So that's why we call this the Bollinger Band squeeze, because typically we see volatility and price really getting compressed and squeezed. And if you think of, I'm trying to think of an example of like a toothpaste bottle. When you squeeze and squeeze and squeeze your toothpaste to try to get that last little bit of toothpaste out of that canister, it eventually will squeeze out of the cap of that toothpaste bottle and move directionally wherever. So that's kind of where I can think about that as an analogy to price. It's just getting squeezed and squeezed and squeezed. Volatility is as well, and that's typically where you can look at for a possible breakout there. So hopefully that helps. Now, I do see a survey in the chat today. I know I'm not your typical host for Getting Started with Technical Analysis, but just like you, I am a technician myself. So please feel free to send in some feedback during today's session, whether it's positive, negative, indifferent. I read it all. So I welcome all of your feedback, and I actually take that into account with looking into maybe adding or taking out of things in future webcasts as well. So, and I know Brett is going to post that multiple times during today's session. So just take a minute or two and fill that out for me, please. So We touched a little bit on squeezes because of a question there in the chat, and that's actually something we may actually tend to look for with the breakout trading strategy. So that's the first one that I want to cover, is the breakout trading strategy, looking for those tail type of events, those tail type of returns that we saw on that graph that I drew. So I'm going to pull up an example, and I'm going to look at Urban Outfitters here. So one of the ways that you can trade these bands is by looking for a squeeze in price and then looking for that breakout of one of the upper bands or lower bands. So in this case, I'm actually going to use this example of just taking the upper band breakout in this case. So that is price moving out of that upper tail, moving to the positive side towards 3 sigma or towards the third standard deviation, really capturing that upper tail type of event. And if we are trading a breakout strategy, this is where a bullish trader may take a long entry there with a close or a move outside of that upper band. Now, if they're going to take that strategy as the entry looking for that tail event, they may take advantage of that trend, ride it all the way up, and they will close out of that trade when price actually closes below or moves beyond those Bollinger Bands on the lower band for that first time. So you can see that would have given us an entry around 56.60. That would have given a breakout trader an exit right around 73.34. So the breakout strategy is going long with a breakout of those upper bands, closing out the position, or selling to close with a break of the lower band. Now, I'll give you another example here. There's something else to keep in mind. So if we are looking for the opposite effect, so let's just take another example here, and let's say we're a short seller looking to take a bearish stance. We would be looking for a breakdown in the lower band. So I'm going to use this as a scenario here. So we're going to say this is the break in the lower band that we saw back in February. We would take a short position with that type of breakout, ride it all the way down, and as soon as it closed above or moved beyond that upper band, that is where we would possibly close our short there. And I see in the chat, yep, Brian, you can't put the toothpaste back in the tube. You can try, but it may create a little bit of a mess for you. I will say I have tried before, and yeah, it doesn't work too well. You just get a mess everywhere. So those are kind of the two different scenarios. Now, the thing to keep in mind with this breakout strategy, it is what traders will look for in addition to those breaks beyond that upper band or below that lower band. For the short example, they want to make sure the direction or slope of the Bollinger Bands matches that thesis as well. So obviously we are seeing that curve in that 20-day simple moving average move to the downside. We saw that curve happen there with a move to the downside in the upper and lower band with a break below it. So that would give us even further confirmation that, hey, this could be a trend trade, a kind of a breakout trade that we could take advantage of. And then same with our other example with Urban Outfitters. We definitely saw the bands trade in a sideways range for quite a bit. So if we saw that breakout, like here, for example, if we saw that breakout here, or even here in this case, because the bands are still moving sideways, they were not sloped upward, that wouldn't give us enough conviction to really take that trade, even though it did trade beyond that, and in this case it closed beyond that one of the times. We want to see that that Bollinger Band is really curving back up. Same with that 20 period simple moving average as well, if we are taking that bullish trade. Okay, So we went through a couple examples on the breakout trading. I showed you how to do that. Now let's talk a little bit more about just possibly looking at the mean reversion type strategy and where we could possibly use this. So that was the breakout strategy. Again, you're looking for tail events. You're looking for that low volatility switch to high volatility, because typically we see volatility increase during those breakouts. So that gives you obviously that conviction to take a directional stance in the movement or that tail event of the trend. This is going to give you more of a mean reverting type of technique here with using XYZ as an example. So we talked about price reaching the 2 standard deviation move, and then with price typically tending to revert to the mean, and what we see with a lot of strategies there. So that's kind of like the buy low, sell high type of strategy as well, where we expect when prices fall, they will return to that mean or will return to that average. And that's where we can look for ranges with the Bollinger Bands. So if you are trading a mean reverting type strategy, something that you may want to look for as a trader would be a sideways movement in the bands here. So this gives us a very clean example here, and I'm just going to actually draw where we saw almost like this perfect range really taking place here with 81, roughly 82 as resistance, and then we saw that support level really getting carved out down here. And you can just see how many times the market really reinforced the importance of those levels, because the more times that trend line or that level is touched, the more important it is for the market in that stock. And so you have more conviction typically as a trader when you do see a break of one of those levels of support or resistance, or one of those trend lines there. So we also saw the Bollinger Bands, while price was hitting those lows and highs, while it was trading in that channel, it was reverting to the mean. So the first thing we saw was a breakdown below. We didn't see a close below it, but we did see a break below the lower band. But that was the kind of like the start of this range. And you could even move this zone up a little bit too to kind of encompass that candle as well. But we did see the start of a range really taking place here. So that would have given us maybe a chance to kind of be a buyer at support there and take a long entry if we are looking towards resistance to the upside. That would give us conviction to take a long entry if we saw price trade through that and bounce back up, since it was in that range. So we would have taken a long entry there. And then as price got back up to those former highs where we saw the highs being made here, the highs being made here, this would have given us that conviction with that move above that Bollinger Band and price hitting the upper bounds of that range. That would have been our mean reverting kind of technique there, telling us that price is going to revert to the mean, and that's typically what it's going to do. So our entry for a bullish trader would be enter at that touch of that lower band, exit our longs at that touch of that upper band there. Now, if we are a short option, or not a short option seller, a short seller in this case, who knows, maybe you want to pair this with options trades, but we're not going to go into that today. Maybe you did want to take another stance where you sold short here with an upper break of the Bollinger Band, and then a few days later, when you saw it touch that lower value of the Bollinger Band right around that neckline support or horizontal support, that is where you would close out that short and buy that back there. So you can just kind of see how both short sellers and long buyers will kind of trade the Bollinger Bands with that mean reversion strategy. So again, the mean reversion strategy, we are looking for bounces. We are looking for price reverting from one end of the spectrum to the other, because we know that price would get extended And that's kind of what we're assuming. Price gets to that extended level, but then reverts to the mean. Price gets to that extended level, then reverts to the mean, to our 20-period simple moving average, and then kind of vice versa. So, and then we obviously saw that eventual breakdown with that close below, and then we saw it break through past that support level as well. So again, for a breakout trader, you could break out, use that as a breakout signal there in that case. So those are the two different strategies on using the Bollinger Bands: the breakout, tail event, trend-based strategy, and the mean reversion strategy here. And again, these are the 20-period simple moving average, 2 standard deviations to the upside and the downside. They're going to contract when volatility gets compressed or when volatility squeezes, gets lower. And they're going to expand typically with a breakout when volatility moves higher, because we do know that volatility is mean reverting. So low volatility periods tend to switch to high volatility periods there. So let's see if there are any questions before we get into the next portion. I don't see any in there, but if you do have any questions about this, if you've used these types of strategies, please feel free to put that in the chat. I'd be interested to see if anyone has built kind of like a trading system, trading rules around that, because that is what we're going to get into next. So I'm actually going to go through how we can go through scanning for these possible setups. And we're going to use a scan example for just the breakout scenario. And we're also going to go through a trade example for the breakout scenario as well. So we're kind of leaving mean reverting in the rear view here. We showed you how it works, but I'm just going to lean a little bit more into the breakout strategy here there as well. And then I see a question in the chat, Laura. So XYZ not a signal now, it broke in November. So it would have given us those signals for the mean reverting strategy here. But for a breakout, if it closed below and especially moved further below, that would have been for a trend signal, or for a breakout trading system, that would have given us that indication to go short in that case, especially since those moving averages were looking like they were curving down at that time as well. So that would have given us that signal back then. We don't have a signal now. If we did take that short when that happened, we would be looking for a close or a move beyond the upper Bollinger Band there to close out our short for the breakout strategy there. So hopefully that helps. Okay, let me move to the scan tab here and go into Stock Hacker. And we're actually going to look for some examples of stocks that may actually be breaking out through their upper band right now. So we're kind of going to adopt the view of looking for a bullish trade, looking for a bullish breakout, a possible tail event to the upside, and looking at some liquid stocks to help us with that. So I'm going to start our scan in all listed stocks here. Just keep it very broad. Start with a basic stock filter of at least $20. We want to filter out some of those lower price stocks. And especially those of you, I know this isn't necessarily an options class, but if you do want to trade options on this, we're looking at a little bit of a higher value there. We're going to add another filter here for study, and we are going to look for liquid stocks with an average volume of greater than, let's just look at 2 million for fun. I know 1 million is pretty liquid, but let's just look at 2 million. So that still narrows it down, but we have too big of a watch list to manage there. So we're going to add another filter and go to study here. And this is where we're going to incorporate the Bollinger Bands study here in this case to look for that breakout above that upper band. So it could be a breakout that's happening right now, or it could be a breakout that happened yesterday. So depending on what you're looking for, this will kind of, when we go through this will encompass both, and I can share this scan with you guys as well so you could use it. But if we take this, we look at custom, and this will give us kind of our custom filter that we can look for here to build this type of condition. So I am not an expert on ThinkScript. I know Mike Fairborn teaches a class on that. He is much better than myself on ThinkScript, so I'm going to stick with the Condition Wizard where my comfort zone lies. I'm going to click on Edit here, and I'll click the drop down and just start with price because we want to see the price or the closing price move beyond that upper band. So we're going to say crosses above that study. We're going to search Bollinger Band. And instead of using the midline, we're going to say the upper band. So we're saying the closing price crosses above the upper band, and we could say within 2 days. So this could have happened today where we're seeing a breakout today, but not necessarily a close yet because the market's still open. Or this will give us a indication of a stock that closed beyond it yesterday. So encompasses 2 days there. I'm going to hit save there. And you could always copy that script, use close crosses above the Bollinger Bands, upper band within 2 bars or within 2 days. So I'm going to click OK there, see how many results that really yields. Okay. That gives us a ton of results to work with. We see a lot of familiar names there. I see Apple on our list. Let's see what else we have. Lululemon, Macy's, Gap. We see a ton of names there. So I'm going to click Save Scan Query on the right-hand side. I just went to this 3-line menu there. Save Scan Query, and we're just going to name this our Bollinger Bands Upper Breakout long scan. Okay, so I'm going to hit save there. Now, if we wanted to, we could always click that 3-line menu there and click alert when scan results change, because when we know that when we save a scan, it then becomes a dynamic watch list that we can look for on our left-hand side in our personal scan. So I'm just going to look for that dynamic scan or that dynamic watch list of that Bollinger Band upper breakout long. And if I want to continually get alerted when that scan results change, because I may be looking for those long only bullish opportunities to trade that possible breakout, I could alert when scan results change there and get alerted when a symbol is added to my scan. So you can get when added or removed, whatever you want. You can get alerted for every change, a list of changes, whatever your alert preferences there are. But that will kind of give us an idea there. So obviously familiar names that we are seeing on this watch list. And if we are looking for a breakout in the trend here, let's just move over to the charts tab here. And I'm going to move this out of the way if I can. Let's see. Okay, there we go. We're going to go over to the charts and we're going to use Apple as our example. Okay. So we've obviously seen, now we can just kind of see on this chart, since really June, July, we have been in a strong uptrend. We are making higher highs, higher lows, really moving all the way up there. And it's honestly kind of been, even though it is a trending type of environment, you can kind of see it's been, as the trend goes, it looks like it's been kind of moving to the upside, not really breaking out of those bands, really staying within those bands during that move. It will go to the upside, maybe touch the lower one, go a little bit below the mean, and then kind of bounce from there. And that's kind of what we saw here as well. So I'm going to zoom into this a little bit. So we already have our conviction that Apple is in an uptrend and it has broken above that upper Bollinger Band there. So it hasn't closed above it, but it's moved above it. So if you want to wait for a little bit more confirmation, you can see if it closes above it today. For this example, we are just going to use this as that example there. So we can also note that price actually has been squeezed quite a bit here. And you can actually see that the Bollinger Bands really were contracting over this time period, which typically happens right before that breakout. And that's kind of what we're seeing now. So you kind of have that indication where low volatility tends to switch to periods of high volatility there in that case. So if we are trading this breakout, this could give us that indication that and that conviction that because that average is still sloping up, obviously those bands are coming out from a squeeze, so they'll kind of look like they're moving in both directions there, kind of like what we saw there with that squeeze. But the moving averages is trending up, so that would give us conviction to enter into a possible trade there. And I see a couple questions in the chat. Reload the scan. We have the scan loaded here, but I'm going to actually share that with you as well. So share scan query. Can't talk today. Now, remember that these are for educational purposes only, so these scans are not advice, not guaranteed for timing or accuracy, but that is the scan. I will actually share that in the notes of today's session as well, so once it's posted, once it's archived later, you will be able to see that. So that is the Bollinger Bands there. Now, how are we feeling with everything? Kind of everything that we talked about, using this as a possible entry trade, a bullish trade to the upside there. Are we ready to go one further? Possibly a trade that you could possibly set up, not just the scan, but a trade that you could set up for the future for this trending strategy. So, if you were already looking at Apple, you already noticed a structural uptrend taking place, and you wanted to place a conditional order when price closed beyond that upper band, and you wanted to place a conditional sell order, so that buy order, that entry order may trigger a later sell order to trade that system if we saw a break of that lower band. So I'm going to just show an example. I'm not going to place this trade today, but I'm just going to show you an example of what you could do. So I'm going to go to buy custom here. I just clicked on the price of the stock. Anytime you see that in Thinkorswim, you could just click on the price of the stock, place a trade. So buy custom, and I'm going to go with stop. I'll change that actually in this case. So we're going to make both of these market orders, because we don't know what the price of the stock is going to be based off of the condition of a break of an upper band or the break of a lower band there. So just keep in mind, those are going to look for immediate execution, not necessarily having control over the price there. So if you want to wait for the alert in your watch list or something like that, you could place a order when you do see that alert, and then use it as a triggering order if it closes below that. But we're going to show you this to the upside and to the downside here. So looking at our conditional order entry, we're going to click that little gear there. We're going to say when Apple's Bollinger Bands, and I'm going to click edit because we're going to have to open this. So edit, we're going to do the same thing that we did before on the scan. So we're going to select this drop down, go to price, close, crosses above. We're going to select study. We're going to get lots of reps doing this. Bollinger Bands, upper band within 1 bar. We'll just kind of use that as an example. Oh, whoops. What happened here? We're going to use price, close. There we go. Okay. Yeah, double check that because that jumped on me for some reason. So closing price crosses above the Bollinger Bands upper band. Do not forget that part. And then hit save. Okay, so we have a crosses above that upper band for our long entry. So we're going to buy 100 shares for this example with that long entry with a cross above. Now for our exit, since we talked about the exit being the close beyond or that break below the lower band, we're going to take that sell market order, use a conditional order for that. Do the same thing that we did before, pull up this study, edit window, click edit over here on the right hand side, go to price, closing price, crosses below, study, Bollinger Bands, and we're going to use the lower band in this case within 1 bar. So remember, crosses below, lower band, I would just double check that, hit save. You can also look at the writing there, the script for that as well, hit save and hit save. So I'm not going to place this trade, but if you click on confirm and send, this will obviously give you a nice little read back of your orders on what you could do with a cross above or a cross below. So you could use that as part of your trend breakout system with the Bollinger Bands. We showed you a couple different ways you could scan for it to make it easier, or I guess one way you could scan for it to make it easier to kind of identify these stocks that may have breakouts. The second kind of step with that breakout strategy is you want to look at the chart. You want to make sure that price is in the direction that you think it is breaking out in. So we want to look at the slope of the Bollinger Bands. And then from there on, then we can place that trade to enter into the market into that specific name and have our exit order on that downside there. And when these market orders are based off of conditions, you can make those market orders good till canceled. That is literally the only time a market order can be good till canceled. So those orders will stay out there for 6 months if you do use that. But we covered a ton today. We covered a ton. So we went through the basics of the Bollinger Bands. We talked about how they're used, dove into a little bit of the stats behind the Bollinger Bands as well. Looked at two different strategies, the breakout trending strategy, the tail event strategy, so that would be considered the breakout strategy. And then we looked at that mean reverting strategy or that range bound market, that kind of bounce strategy back and forth. So then we give you a couple tools for orders, scans that you could use for these types of movements as well to find those in the market. Please fill out that survey. Thank you so much, Brett, for posting that a couple times. And thank you, Brett, for just answering all our questions in the chat there as well. And yeah, we did cover quite a bit today. So if you do need to rewatch this video, play it back, it will be archived. Usually takes a couple hours for these to be posted. I will put that scan in the description as well. Please feel free to use that as an example scan as you wish. Change your parameters there. If you found this video helpful today, please give us a thumbs up. It will help your algorithm. It'll help other traders' algorithm that are looking for similar types of strategies, looking for similar type of learning. And please subscribe to us on Trader Talks Schwab Coaching on YouTube. I know I'm subscribed. I get the alert with the bell every single time. So please subscribe as well. And then please feel free to follow us on X, Brett Crowther CS, Rachel CS. We post charts like this all the time. So please give us a follow there. And I also wish you all a happy Thanksgiving. We're only a couple days away, so I hope everyone has a happy Thanksgiving. And thank you for tuning in. We'll see you next week.